Let's take a letter.
We just got a letter. We just got a letter. We just got a letter. Wonder who it's from?
Betsy says, thank you so much for your hard work and for being awesome. I can't think of any insults like most people do because y'all are great. That's very nice. I love how she qualifies. I know I'm supposed to insult you here, OG, but I can't think of one. I heart each of you equally, especially you, Doug. I'm so glad Doug's not down here to hear that. I'm considering buying a new home, and our realtor suggested not using a mortgage this time around because our current house is paid off and we're financially independent. I didn't know this was a thing. That I could actually...
Wait, I can just write a check for houses?
Wait, what? That is incredible. Isn't that cool, though, that you're so used to the fact that I have to have debt for this purchase going, what?
Wait, I can just, you guys will just take a barrel full of cash?
I've been maximizing retirement contributions and socking savings into a brokerage account for the past decade. This will be my first time taking any funds out. Selling our current home covers half of the new house budget. I have the other half of the new house budget available in a money market. We would like to buy the new house, move, and then sell our current home. So I need to bridge that other half during the time. I ran the math on liquidating the needed funds from the Fidelity Total Stock Market Index in my brokerage account, selecting those parts that have the highest basis that I've held for longer than 12 months. We'll get into, Stackers, why that's a thing and why Betsy's talking about this, and paying long-term capital gains tax on the gains. I compared this to an adjustable rate securities-backed line of credit, which Fidelity offers, presently at 7% with no origination fee. As I'd repay the line of credit with the proceeds from the sale of the current house, the plan would be to have this paid off ASAP within 6 to 12 months. The math appears to be in favor of utilizing the line of credit instead of selling my stuff. However, I've heard people make comments about locking in gains, and the stock market, as you guys know, up this total stock market fund up 16% over the past year. Would it make sense to take some capital gains despite the tax hit while the market's up, or is that trying to time the market and I should use simple arithmetic to make this decision? Betsy, thank you so much. People hear all the time about, maybe dispersing the capital gains, take a little bit of it at a time. The market's up. I got a bird in the hand, OG. Do I use the line of credit or do I sell some of my stuff?
So just to make sure that I've got all the facts correct. So we have a new house purchase. I'm just going to make the numbers up just so that I can illustrate them. New house purchase is $1 million. I've got my current house I'm going to sell for $500K, and I've got $500K in a money market fund. And then I also have other money in a brokerage account that I could sell to maybe like another $500K, maybe. Yeah,
the money in the brokerage to make up the other $500K, sell that while I'm waiting for the house proceeds.
Yeah.
Because I don't want to sell my house until I move into the new one.
Yeah. So if you think about this from a timing standpoint and kind of what would happen if you don't do the line of credit and you don't want to get a mortgage, right? If you just sell something, all you're doing is you're going to sell something from your total market fund and then pay some taxes and then turn around and buy the fund again, right? That's the plan. The risk, of course, is that you say something silly like, the market's at an all-time high. Maybe I should wait for the market to come down before I get back in. And then, now you have all this money sitting in cash and the market continues to go higher from here and you miss out on future gains. For whatever reason, even when people, and we run into this, Anna, a lot, like let's say that you retire from your job and you go from your 401k to your IRA. They go, well, should we invest that all today? It's like, well, it was invested yesterday. Of course we should invest it all today. Like, I'm scared that it's out for one day. Today might be the day it goes up 2%. We like in the transfer. That sucks. Like, yes, get it all in. Shouldn't we dollar cost average it in? No, it wasn't dollar cost average before. It was there. Just put it back, So there's a big risk that happens. Purely from a math standpoint, what she's talking about here is Fidelity and other brokerage companies, Schwab, will say, hey, you've got $1 million. We will give you $700,000 of cash, roughly 70-ish%. We'll give you $700,000 of cash, line of credit at reasonable market rates for you to use whatever you want. Just like that. You fill out a little application. We run a little bit of a credit report, but mostly it's based on how much money you have. And we'll just give you this line of credit. It's just based on the value of your brokerage account. You can't do it on values of IRAs or Roths. This is just purely brokerage money. and you can use that money for anything you want. It's different than a margin loan in that you can't use this money to buy additional securities with it, and the interest rate's markedly less generally than a margin loan would be. But for the purposes that she's talking about, this is a great idea. This is the usefulness of it. So you can be a cash buyer for the new home and fund it in 2 weeks and be done. And then you can do the move and repay the loan. People are concerned about the loan, but frankly, it's a heck of a lot easier and it doesn't cost anything relative to getting a mortgage, because that's the alternative, right? The alternative is to go get a mortgage for $500K and then pay the mortgage off with the house proceeds to fund this. But you're going to pay a bunch of costs and fees, and it's going to take 6 weeks to get a mortgage, 4 weeks if you're lucky. And you have to come up with a bunch of documentation and tax returns and pay stubs and bank statements, and it's just a giant mess. Or you just click a few buttons on your Fidelity app and boom, they give you all this money accessible. I would 100% of the time take the securities loan to be a cash buyer, knowing that I'm going to pay it off as soon as I sell the house.
The reason that 12 months was important when Betsy wrote this out is because you pay a lower capital gains tax if it's 12 months. That's the difference between short-term and long-term. The government tries to reward people for being investors, not to be traders. And so the carrot there to have people invest in companies instead of trading companies is we'll give you a lower capital gains tax if you hold on to money for more than 12 months. So that's why she's like, listen, this money sat here longer than 12 months. But my first feeling wasn't about this tax bird in the hand that Betsy's thinking about. It was exactly, OG, what you said, which is, what the hell are you going to do when you sell the house proceeds? And Betsy, I don't know you, but the average person I worked with often did something dumb. Just ended up doing not great stuff with that, because you end up then with a bunch of cash sitting around. What do I do with the cash?
It's a different thing than, take away the value of the house. So or the money market fund. So let's say that she's trying to buy this $1 million house. She's got a $500K house and $1 million in brokerage money, no money market, just all investments. And if that's the question, hey, I don't have any liquidity, I've just got investment money. Should I sell the investments to buy the house and pay taxes? And, I got half of it. And should I sell the other half? That's going to come down to personal opinion about debt. And it sounds like she likes the fact that the house is paid off. Yeah, there's going to be a little bit of a tax bill on the money that you sell. And there's no money going back. You know what I mean? Like, this is selling it or not selling it. And so then the question is do I want to be debt free, or do I want to have a loan payment associated with this house? Because my net worth number is the same. Right? It doesn't change my net worth. I'm just moving money around on the Monopoly board.
And she's still financially independent after this move.
Yeah. Assuming that that's all the case. Right.
Yeah.
So
that's a whole different
thing, in which case then, I would sell it. And also I wouldn't look at it from the perspective of like, the market's at an all-time high. Should I do this? It's like, well, the money is there. This is what it's for. It's for me to use and move about as I please. And again, you're not doing anything with your net worth by not having a $500,000 loan. Instead of having $500,000 invested in 500 companies, you have $500,000 invested in one single family house. Okay. Not how I would do it, but like that works from a net worth standpoint. But she's talking about, should I sell this to turn around and rebuy it again? Because she has the liquidity to pay all of it off in cash. Take the loan, like do the securities loan and be a cash buyer, sell the house as quickly as you can, and pay it off.
Anna, you're nodding as well.
Yeah, I agree. Simplicity-wise, this makes the most sense. I don't even think it comes down to the math. Like, she mentions the math a couple times in her question, and it's really about this. Although not intentionally trying to market time, it is market timing. And I don't think it's the best move, because you're going to have a lot of anxiety around it too. Once you get to the point where you sell off your house, you're like trying to make a decision around what to do with the money, put it back in, like OG was saying. And so I think simplicity wise, open up the security back line of credit and move from there.
Thanks a ton for the question. Betsy. Thanks to everybody for the questions today. Such great questions from our stacker community. If you've got questions, head to stackingbenjamins.com/voicemail. That gets you on the show. And if you want to write them, you can write me, joe@stackingbenjamins.com. But we definitely prefer that you call in. And because of that, you know what? If
Here's
you're
a
brave
t-shirt.
enough to
Swag.
call in, we give you some swag. We give you some swag. So
Swag.
2 people going home with swag today.